Hi guys, and welcome back to the channel. My name is Kai, and today we're going to be talking about how to invest your first 1,000. So when I say 1,000, it can be euros, it can be dollars, whatever is the equivalent currency, but let's base ourselves on around $1,000 or euros. You may be very young, just starting off in your first job or about to graduate university, and you may be asking yourself, I want to invest, I want to do something with my money. I always hear about money should be working for me, and that's great because it should. So the question is, what's the best way for you to get started and invest your first $1,000, euros, whatever it may be. So in this video, I'm going to be running you through some of the best options to invest your money in. Now, first off, 1,000 euros or dollars may seem a lot to some and may seem like very little to others. But it always depends on how you look at money. Yes, you're probably not going to retire on $1,000. So let's just take an example. If you invest $1,000 and get a 20% return, which 20% return in 1 year is actually very high, so that would equate to $200. 20% of 1,000 is $200. Now again, $200 is great additional money to have, but it's probably not going to be enough for you to quit your job. Nevertheless, we always speak about the power of compounding. Now, if you would do this as soon as you start your career, over time, those 20% growth plus additional reinvestments from your side that you would do monthly or annually would really compound into massive net worth. And that's what we want to talk about, because it's not about getting rich quick, but really playing the long term. So before we start, one important thing is actually for you to really understand what is your investment style, because different people have different risk profile. Recently, I was actually thinking about buying a Chinese distillery, but then I decided against it. It's risky business. Some people feel very confident going to race horses and betting their money on that, or to the casino and put the last salary on a specific number. Now others are even worried about buying a single stock because that might seem risky to them. So you have to understand, what is your risk profile? How comfortable are you to possibly lose some of your money, or on the flip side, have great gains from it? So once you identify it, whatever is your risk level and that you feel comfortable with, you could try one of the following ways. I'll be listing them from the least risky to the most risky and see if that's something that resonates with you. Investment number one. Invest in yourself. You always hear about invest in yourself first. Now I understand that sounds cheesy, but the reality is it really is worth the money. Why do you think that people invest thousands and thousands into a university degree? Because they can expect a certain payback once they have a high paying job afterwards. Now I'm not saying university is the best for you, that really depends on your own preference, but getting knowledge and becoming more skilled really future proofs you. Constantly invest into yourself, buying courses, buying books, going to seminars. I've spent myself a lot of my money constantly to invest into myself, learn new things, find mentors, and really continue to grow, because the moment you stop growing is the moment you fall apart. So especially when you start off with a small amount, $1,000 even at 30% will only give you $300 versus $1,000 invested in the right course that helps you, for example, to launch your first e-commerce store or become an influencer, or help you launch your own social media agency, or helps you to start your own YouTube channel. And if you enjoy it, really appreciate if you hit the like button and subscribe to the channel. So really do yourself a favor and don't forget to invest in yourself. That's really crucial, and that's the least risky, but in my eyes, one of the highest returns, because you will be able to capitalize on your skills, on your knowledge, and that will later exponentially help you to grow your net worth in the process. Point number two, index fund investments. ETFs, exchange traded funds, are a great way for people not too familiar with the stock market, that don't want to go into individually stock picking and analyzing the market, but they want to be invested. They believe in stocks, they believe in the growth of companies, and ETFs are a great way for you to enter a specific market. ETFs basically mimic specific markets and sectors and industries in any region of the world that you're interested in, and allow you to buy a piece of that market, because it basically reflects and mimics the average of the market tendencies. So if overall the US is upward trending, which we believe it will continue to do so, you would want to invest into S&P 500, which basically includes the 500 largest companies by market capitalization in the US. Well, you could just go out there and buy all 500 individually, but that would be extremely difficult, time consuming, and not very efficient way. So what you could do instead, sign up with one of the brokers that allow ETF trading, and simply with one button, buy a share of that ETF, and automatically you will own a piece of that market. And that's a great way to get invested. It's easy. Over time, when you look at 20, 30, 40 year returns, ETFs most often outperform individual stock pickers or even certain hedge funds. So Warren Buffett, one of the richest men in the world, is a big advocate of ETF investing. So if he does it and recommends it, why wouldn't you? And I really recommend you, if you don't want to study too much of stock investing, it's a fabulous way to enter the market. Next on the list is buying individual stocks. Now, as we just said, buying ETFs is really an easy way to enter with average market returns over time. So if you really want to study more about companies and believe in a specific company's future potential, and you have a bit more risk tolerance, then investing $1,000 in just one stock is a great way to capitalize on bigger returns. While of course the stock can also drop, if it does increase, quite often it can increase at a higher rate than the average market would do. So you might hear about a future product launch, which will be great momentum building for the company, and you think therefore the growth of the company will increase and the price will go up, or potential merger with another company, again causing the price to increase. So if you're more into the matter and wanting to understand and analyze the market, which I personally love to do myself as well, I think it's a fun way to really get invested and really get a feel for how a company is doing. You will read the news differently. Whenever you hear about the company, you will immediately look, how does it correlate back to the stock market? I'm a big Apple fan, so whenever I see a product launch of a new Apple, I immediately go back to the stock market and see, wow, what's actually happening with the stock? Is it better than people expected? Stock will go up. If it's below expectations, stock will drop. So for me, it's really fun to interact with companies and brands that I use myself, because I usually only recommend investing in companies that you personally believe in. Ideally you even use. So in the case of Apple, whenever I buy a new phone, I actually feel like doing something for the company I own, because I am a shareholder. So by buying more of their products, I will help actually to increase the stock price further. And why do I say only buy one stock? Because again, $1,000 may not be that much capital to really diversify. Because ideally you want to diversify. You don't want to put all your eggs into one basket. So in an ideal world, you have some gold, some ETFs, some bonds, some stocks. And when we talk about stocks, you want to have a collection of stocks in different sectors, in IT, in logistics, in tourism, in retail, in commodities, to really own a variety of the market. Because we've seen in recent times when global tourism came to a stop, all these stocks dropped immediately. So if you were to own an airline, you really would have had a rough time. So by diversifying, you can ensure that your risk is kind of more balanced. So that's again why we want to invest in the ETF in the first place. So if you have $1,000 to start with, I think if you over diversify and you end up only putting, let's say, 50 euros into Tesla and it goes up by 10%, you basically make $5. Which, I mean, is still better than nothing, but as a percentage, it's really quite little. So I think if you have a small portfolio to work with and you have a high risk tolerance, really go all in into one stock and you will really do your homework. You will read the news differently. You really want to understand everything about the company rather than owning 20 stocks, but you only have a little invested, so you don't really care if it goes up and down. If you put all your money into one stock, trust me, you will be very excited about what's happening with the company, and you will really be on top of things, which is great for you to learn more going forward. Let's move on to the next point, which is trading cryptocurrencies. Now, in recent times, we've seen crazy booms in the crypto market, and I talk more about why I love cryptocurrency in this video right here. I'm really long-term bullish on cryptocurrency because I think while there is a lot of short-term fluctuation, in the long term, it really offers a whole new asset class in itself and a lot of value that traditional money doesn't possess. So I think it really is the future. I still think we have a long way to go, but that's why being early on, especially with little money to invest, you can really capitalize on the big gains. For a Tesla stock to grow 10x, well, that's hardly gonna happen because already it's one of the most highly valued companies in the world. Though when we talk about certain coins in cryptocurrency, Cardano, Ethereum, IOTA, even Bitcoin, which already is the most mature and the biggest of all cryptocurrencies, you can easily see potential from 5x, 10x, up to 100x for some smaller coins because they offer certain utilities that normal money doesn't. So here again, it really depends on your risk profile. Some people really want to buy small cap altcoins, which is really undervalued, have a small market capitalization and are not so known yet. So imagine some of those altcoins have grown in the past by up to 5,000x. So if you put just $1, you would end up with $5,000. So imagine $10, $50,000. Now that's the extreme case scenario, and again, nobody knows which of those hundreds of altcoins out there will go up because some of them will also completely vanish and some of them are a complete scam. So again, coming back to your risk tolerance, myself, I really invest into more established coins. such as Bitcoin, Ethereum, and Cardano, because I believe they have proven concept, they are stable, and they are future-proof. So buying cryptocurrency, definitely more risky than buying an individual stock. You need to balance the risks yourself, whatever feels more comfortable, natural to you, and make a decision. So once $1,000 that you invest into crypto grows over time, make sure to capitalize some of those earnings and then allocate some of those either into ETFs or into the stock market. And lastly, we have day trading. Now, day trading is something that's been really popular on YouTube, on TikTok, with all these traders showing themselves how they're making $1,000, $2,000, $5,000 a day by day trading. And then people ending up buying the next Lamborghini. So it really seems promising and seems great. But honestly, in my eyes, I think it's extremely risky. And for you to really understand what you're doing, I think you really need to study that long term, because anything else is basically just guessing and gambling. Because they show you about pattern reading and it's great. I can explain any pattern retrospectively. It's like explaining the football results, why a team lost. It's easy when you know what happened, right? When they show you the charts and reading the charts, yes, sometimes there can be a duplication in patterns, but the future is the future, which nobody knows. If we knew, we would all be day trading. So when you day trade, you literally directly compete with some of the biggest companies in the world that have almost infinite resources. So then I ask myself, if I sit at home in front of my MacBook and I want to compete with them, most likely I'm gonna be on the losing side. Now, I'm not doubting that a lot of people can end up making money. So really, don't get me wrong, I have respect for those people who do make money on this. But if you're starting off, I personally think it's a very risky, extremely volatile, an uncertain way to invest your money. In this case, it's probably gonna be better to go to casino with your mates and have a good time over there. So in closing, 3 things I want to leave you with. 1, really keep a close eye on the fees. Because fees, even though they seem small, can really eat into your profits over time. So that's why I believe in using a broker that allows me to have commission-free trading when I buy stocks or ETFs. Even when I buy cryptocurrencies, I'm not using Coinbase, but I'm using Coinbase Pro, because I can save up to 50% of transaction costs, and I explain you more about this in the video over here. Secondly, your biggest asset is time. The earlier you invest and the more regular you do it, it really works in your favor. Again, the power of compound growth is working in your advantage. That's why it's better to invest early on small amounts than when you're 40 or 50 and invest big amounts. And thirdly, don't gamble. It's a marathon, not a sprint. That's why I said again, day trading is probably not the preferred long-term wealth building option. You want to be diversified, you want to have different asset classes, some of them more risky, some of them less risky. Definitely have some ETFs, have some stocks that are a bit more risky. Buy some future-proof cryptocurrency, because one of those will definitely blow up further going forward. So make sure to diversify, but don't gamble your hard-earned money away. With this, I thank you so much for watching. I hope you enjoyed the video. If you did, really appreciate if you give it a like, subscribe to the channel, and let me know in the comments how you plan to invest your first or your next $1,000, euros, whatever it may be. I'm interested to know. Stay blessed, stay awesome, and I'll see you in the next one. Take care. Ciao, ciao.